Okay, welcome everyone. We'll start our lesson 3. Today lesson will go through LO3, be able to produce financial statement. My name Anjum Satar and my email address here. Good evening everyone. We'll start. And as we last two lessons, we learned about LO1, LO2. Okay, we'll recap first what we learned. Anything you remember what we learned during last two lessons, please?
We learn about assets.
Excellent. We learn about assets and we learn two types of assets. Yes, what those were, if you may remember?
Non-current assets and current assets.
Non-current assets and current assets. Okay, yes, please. What else?
We learn about that capital equals assets plus liability.
Okay, we learn about double entry.
Okay.
We discuss about debt click rules.
Debit and credit.
Yes, and we learn about, especially yesterday lesson, we discuss about control accounts. We discuss sales ledger control, yes.
And purchase ledger.
Sales ledger control. What is also called? Sales ledger.
Credit. Credit. Receivable.
Excellent, and also known as debtors. Why we have due to credit sales? Huh? We learn about purchase ledger control. What is any other name? Is also known as
trade payables.
Excellent. Trade payables.
Creditor.
Sorry, what else?
Creditor. Yes,
good. Well done. It's called creditor. It's due to the credit purchase. If we have a credit purchase, then we have these. We learn about VAT. Yes. We said VAT goes always on the same side, whichever side that click will go. Yes. And we learn about input VAT, which is mean VAT on purchases, which we can are expenses we can refund. And we discuss output VAT. Output, which is mean VAT on sales. Yes. So that's we learn during, and we prepare accounts. We also mentioned yesterday lesson bank reconciliation. Yes. Bank reconciliation. Okay. Yes. Any question?
No.
Okay, so that will go through. Any question? If you have, please ask. So that's we learn up to now. So today lesson and LO3 we have the learning outcome which prepare the financial statement. First of all, we learn about how many types of statement we prepare. Do you remember we discuss about statements of profit and loss? Yes.
Profit and loss.
We discuss about statement of balance sheet. Yes. We can prepare statement of cash flow, and we can prepare statement of change in equity. Yes. So these are all the statements we learn up to now. Okay, any question? Okay, so this statement shows income and expense. Balance sheet shows assets. Yes. Liabilities. and capital. Yes. This shows inflows and outflow. Yes.
Okay.
And this statement shows revenue. Yes.
Income.
Which we discussed. Revenue is also known as sales, also known as turnover.
Okay.
But then we said cost of sale. Yes.
Mm-hmm.
Then we said equal to gross profit. Yes. Then we said you minus overheads, expensive. Yes. Add plus other income equal to operating profit. Yes. Or we can call minus taxes. We can call net profit. Yes, that's we learned in previous lessons, which I mentioned. We discussed cash flow have inflow, outflow, but 3 activities: operating, investing, and financing, where we can get the money. Our normal operation through investment or through borrow money. Yes, cash can in and out. So that's we discussed, and this is the share, how much dividend we paid, how much shares capital, shares premium, share we discuss revaluation, return earning. So these sort of things we already a bit mentioned you. Today we prepare two statements, which is these two, which is profit and loss and balance sheet. So from the trial balance, incomplete record, and prepare the balance sheet and profit and loss, which is statement of financial position. Trading account include revenue, sales, return, and all. And then end of year adjustment of doubtful debts, revaluation, and all. End of year, if the asset value go up or down, we need to make adjustments. Okay, that's we need to be learned.
Okay.
Any question?
Okay. No.
We have our assessment criteria. Prepare the trial balance from the given data, which we can prepare, yes. And then we can prepare the single entities financial statements, yes. Single entity mean one organization, not two organizations merged together, and we can prepare the consolidated. Okay, that will go through. So first of all, what is the trial balance? At the end of accounting period, each general ledger account is balanced off into trial balance. The balances are then calculated in the trial balance. If the double entry is correct, the total debit balance equal to total credit balance. Is it right?
Mm-hmm.
So balancing ledger is shown below. This is the sale ledger control account. Yesterday we discussed. We have a sale 110,000. In the sale ledger is a credit. Here is a debit because this is our receivable. We receive 8,000 pounds. So in the bank ledger will be debit. Here will be credit. And how much is outstanding balance carried down is 2,000. So we have outstanding balance 2,000. So when we'll prepare the trial balance, it will reflect all our figures. So this is the example of trial balance. We can see here, this is the trial balance. We have a sales, we have purchase, we have sale ledger control. So if I'll ask sale, which statement will go sale? Is income statement or balance sheet? Hello?
Sorry?
Sales, which statement goes? We need to prepare two statements today.
Mm-hmm.
Statement of profit and loss.
Yeah.
And we'll prepare today's statement of financial position, which is also known as balance sheet. Yes?
Okay.
I'm saying sales, which statement will go?
Statement of profit and loss.
Excellent. Purchases.
As well, statement of profit and loss.
Profit and loss. Purchase ledger control. Balance sheet, which is a liability, yes. Bank. Balance sheet. Capital.
Okay.
Balance sheet. Loan. Balance sheet. Rent. Profit and loss. Salary
Okay.
expense. Profit and loss. Loan. Profit and loss. Drawing. Profit. Balance sheet. Furniture. Balance sheet, yes, is the asset. So that's the way we can, which we'll go through in details. We'll do more questions. Okay, so we, as earlier, illustrate the process of adjusting financial statement for the accrual, prepayment, depreciation, irrecoverable, and allowance for the receivable. So that will trial balance in this chapter, in this lesson, we can say. Yes, I have copied the link, where I get. We will bring together the material from previous chapters or the previous periods, yes, and we can produce. So trial balance, adjustment, and we can prepare two statements. Okay, any question here?
I want to ask you if how I know the difference between statement profit and loss and statement financial.
All the income and related expense is goes income statement, and the financial position we discuss about accounting equation. Do you remember? Yes, we discussed as accounting equation we learned in the previous lessons. Assets equal to liabilities plus capital,
Plus capital, okay.
and all this goes into financial position, okay, which I'll show you the next slide format how we can.
Okay.
Okay, so under IAS1 is International Accounting Standards, which shows the layout how we can prepare, guide us. So we have all these statements we prepare under IAS1. We can use local standard or international standard. So this is the pro forma, okay, when we prepare the profit and loss. So first came revenue. Let's say we are preparing 2 years. Then is a cost of sales. So what is the formula cost of sales? Cost of sales. So first cost of sales formula always opening inventory. Inventory means stock plus purchases minus closing inventory. Yes. That make cost of sales. Yes. Any question?
No.
Okay. So that figure goes here. Revenue minus cost of sales equal to gross profit. Yes. Then we have different expense. Some like marketing, if it's a promotion, if any promotional staff, salaries, that goes in the distribution cost. If you work admin staff, stationery, yes, we can charge to, or we can put it separate heading, no problem, which is absolutely fine, because this is according to IAS1 layout, okay?
Okay.
So we minus these, then we have a finance cost. Finance cost mean interest. If we borrow money, we pay interest. Interest is expense for business. So we can minus and we can say profit before tax. Then we pay the tax on it and we can say net profit after tax. Any question?
No.
Which we'll prepare today and we'll see. When we prepare balance sheet, we say which company is it, which period this statement is, when my year end, always 12 months. First we show the non-current asset, which we learn about long-term asset last lesson. The previous lesson, intangible assets, we discussed property, plant, equipment. Intangible mean goodwill. So all this goes under the non-current. Then we can add them how much we have. Then we have a current asset. Yes.
Okay.
We can find the current asset. inventory, trade receivable, cash and cash equivalent, then we can add them, that become total asset. We learn accounting equation, total asset minus liabilities become equal to the net asset. Then we have equity and liabilities. Equity, share capital, share premium, return earning, revaluation if we have, that goes. Yes, thus we can add. Then we have a non-current liabilities. Bank loan is a long term. Current liability short term. Trade or other payable, which are also known as purchase ledger control account, which we said earlier. Short term borrowing if we have. Trade liability if we have, we can add them all. We say what is my total liability. So my total liability plus equity should be equal to my assets. Yes.
Okay.
We learn about assets equal to liabilities plus capital. So capital in companies, when the company business, we call equity. Okay. So this is my credit side and this is my debit side. Yes. So both will be equal. Any question?
Okay. No.
Okay, we'll go through example now. We've been given trial balance, yes? So we'll see capital. Which statement will go as capital?
Okay.
Balance sheet, yes? Drawing goes in balance sheet. Purchases goes profit and loss. Return word is mean purchase return goes cost of sale, profit and loss. Return outward sale return goes profit and loss. Discount if we'll give anybody, it goes profit and loss. Sales goes in profit and loss. Expenses goes in the profit and loss. Yes. Sale or expense all goes in the profit and loss. Office salary is a profit and loss. Bank charges, loan interest, eat light, these are all profit and loss. Rent, profit and loss. Printing, advertising. Irrecoverable debt is mean bad debts which we not received. All these goes in profit and loss. Then inventory, if it's the opening, it goes in the profit and loss. If it's closing, it goes in balance sheet. Okay. Then we have a trade receivable, which is asset, goes balance sheet. Trade payable balance sheet. Cash and all these balance sheet assets. Yes. Any question?
No.
Then we've been given in that question end of year adjustment. In the question is a given the following is relevant, which we not included in the trial balance yet. Closing inventory, how much we have? This is debit will be in the profit and loss, credit will be in the profit and loss, and debit will be in the balance sheet. Yes, double entry, all this. Motor van, we sold it against the cost of the new, which is £1,400, and we new bought with £3,600. No entry yet been made, so we can record it debiting by the difference 36 minus 14. So we have to pay cash. We make it new van. New van debit by 3,600. Yes, because van is asset which is coming in the business. When asset increase, we do debit. We paying cash. Cash will be credit, which £1,400. Sorry, cash paying £2,200. Yes, credit, and we giving old car as well, which is £1,400. So that make total. Any question?
No.
Then depreciation we do straight line. Yes, 25% on my which furniture. Sorry, motor vehicle is a 25%. We'll do depreciation expense debit, accumulated depreciation credit. All these adjustment entries given in the next slide. Furniture we do yes, 10% depreciation. Past experience, trade receivable, 5% receivable, the money we supposed to receive, customer not paying. So we can say bad debts, yes? Then accrual mean we paying we use the heat and light, we not paid, so we do expense debit, and accrual is a liability, we not yet paid it, we do credit. Quarterly rent, and up to that period we have a 900. Insurance we have, these are the prepaid, because our period end is 31st, but we make it payment until 30th for the next. So that's why it's there. No, our year end is the 31st May, but we make the payment until 30th June. Yes, so we divide by 3 and times by 2. So 2 months is this year, 1 month will be prepaid. Yes, 300. And we'll do exactly the same. Okay, we'll go through next slide. Next slide, we'll give all the entries. We do debit in, yes, credit. Each entry we done, yes, debit and credit. So we can go through, and then, so these are adjustment, end of year adjustment. Then what we done, we disposed of old van, even we, adjustment entry we made. So you will see here, we purchased an old van, we have, the old van was £2,200. Old van was depreciated £1,100, so 2,000 minus 1,100. So the van real value or the book value was 2,000 minus 1,100. If we do, yes, the difference will be 875. Yes.
Okay.
The carrying value was 875, and new van we purchased it how much? 1,400. Yes. So we need to. So that's, the new van was 1,400. So we have a loss of, on the disposal of the van, £522. Old van, yes, because the carrying value was more, but we sold it less. Yes. Any question?
Okay.
So these are like
no.
Okay. If anything you not get it, you can ask. Any point you can ask. So we did all the adjustment here, and then from these all the figure, rent we have a prepaid. Yes, rent I said 300 is a insurance adjustment. How many months? And then we prepare our final accounts. Okay. You see here, revenue we have. Revenue, we have a cash sale, we have a credit sale, then we have a sale return. What is my net sale? That period is this, yes?
Okay.
Then we calculated the cost of sales. We've been given opening inventory, we've been given purchases in the trial balance. We minus purchase return, we add it carried inward, we add it custom duty if we are buying from abroad, and we minus closing inventory. So my cost of sales is this. We sold it for this and cost me this, and this is my gross profit. Yes. Then I have received some discount from my supplier. I sold old van and I earned the profit. So that is my other income. So that's my income. Then I have overhead expenses, all other expenses. I minus all. Yes. With adjustment, you will see their steps. Each here, these are the adjustment entries end of the year, which is explanation given at the top. Yes.
Okay.
And then we minus all and we get the net profit. That's my net profit. Actually, the profit is this. Gross is the difference, what cost me, what I sold it. Then I have so many other expenses in the business. I minus all. This is my net profit now after all expense. Okay. Then, okay. I think so. You click it to present.
Yes, by mistake.
Okay, so you need to click it. Reclaim presenter role. Okay, no problem.
Sorry.
No problem. That's fine. Is it okay now? Can you see?
Yes.
Okay, welcome.
Thank you.
So this you will see the net profit. Then we prepare the balance sheet. Okay, we call statement. So we have three assets, non-current asset first. motor vehicle we have. That we that was the depreciation and how much is carrying value now. Then we have motor vehicle, how much was, yes. We have furniture, yes. How much is the book value? That's my total non-current asset, 7725, okay, after depreciation. Then I have a current asset, inventory is receivable. I minus my allowance. Allowance mean which I cannot get that bad debts. People not pay me this money as estimate, yes. And then this is my total current asset. Then we have a prepaid, cash in hand. I add it all. So this is my total current asset, and these are total my non-current asset. So 7725 23121 is 3846. Yes. And then we have balance of the profit which is previous year. Yes. So we'll add, if drawing was given, drawing means somebody draw money for personal use. Yes, we minus. We add it, loan is a liability, and that's my asset. And then I'll go, this my current liability. We have, yes, total worth of, and that's my total asset and liability. So that's my asset total. That's my equity plus plus liabilities. That make my total figure 30846. So asset 30846 and my capital and liability total is 80486. Yes. So this is my balance sheet is balanced. Any question?
Yeah, it's very difficult this one.
Okay. Thank you. So then we said trial balance, it lists all the balances. We make adjustment. We can prepare the statement. To understand further, I copy the link to watch a video, which is quite good to watch. So please, you can do in your time. Yes, that will help. Plus, we done one question, but it's good to do more question. So what you need to do, please, I copy the link for you. So you need to go here, the link, when you open the link, and you will see there the first question we done. Yes, you can test your understanding. You can try there, which is solution is a given. So you have a trial balance. Yes. And you will see the trial balance. Then we've been given the adjustments. Yes. All adjustment being done. Yes. That's your understanding question. And all this being solved here. Huh? Yes. Balance, profit, and all the working given. So that will enhance your understanding. So watch video and go through extra questions. Okay. So that's all we learn about in the financial reporting, how we can prepare financial statement, where we have to report, and how we can do reports. Huh? So that's all today. If you have any question, feel free, drop me email, and I'll try my best to get back to you soon as soon as possible. Okay, guys. So just a recap, today we learn about how to prepare the statement of financial position and statement of income statement, or we call statement of comprehensive income. So that's all today lesson. And if you have any question, drop me email and we'll go through the next lesson or assignment discussion. Thanks for listening and attending, and have a nice time. Thank you. Bye-bye.
Thank you. Bye.